Good morning and welcome. My name is Shaheen Shahan. I am the Vice President of IIR's Global Analytics Service and I'm based in our Dubai office. I have been with Industrial Info Resources for about 15 years now. And for those who regularly tune into our market outlook discussions, you will have noticed that we have a slightly different look and feel to the previous market assessments. We are now hosting today's discussion from our brand new media suite. We've retooled our previous webinar format to really try and hone in on discussing those trends and developments in the market that are sitting very much at the front and center of everyone's minds. And today I'll be taking a look at some of the key themes and trends occurring across the food and beverage market. And to help me do that, I am delighted to be joined by Randy Godet, who is our Senior Vice President of Research Operations for our food and beverage industry. Randy actually also wears a second hat, that being our Global Head of Research for Pulp, Paper and Wood. Now, before we get into our discussion, I would like to say a very big thank you to our podcast sponsors. Train Rental Services, a division of Train Technologies, delivers scalable temporary power, HVAC, and cold chain solutions to industries across the globe, including food and beverage, planned expansions or production gaps. They provide advanced solutions that help maintain product quality, meet regulatory standards, and avoid costly downtime. Train's temporary systems reduce the need for capital expenditures by giving you the flexibility to move forward or scale without permanent infrastructure. Moving into our discussion, obviously, Randy, you've pretty much seen, you and your researchers across the world have been tracking project activity that I guess has been sort of growing at a reasonable pace. And then obviously we kind of got COVID, and like all other industries, that spending kind of ground to a halt somewhat. We came out of COVID and your industry was then hit with this kind of post-COVID food inflation cost increase, right? I'm assuming that we are starting to see some degree of normalization. Is that right? What are some of the trends, the big trends that you're seeing in terms of capital and maintenance expenditures across the world that your researchers are tracking today?
Right. Well, Shaheen, first of all, thanks for the introduction. In terms of the outlook for the food and beverage industry today, we're seeing actually spending slowing down. Some of the large market drivers prior to 2025 are actually cooling off. And so we anticipate the year ahead to be one with a lower volume of project spend and the overall value of projects to be somewhat lower.
With that trend in play, would you say that the current tariff outlook has kind of had some kind of impact on the industry? I mean, we've noticed that obviously the end consumer is very, very sensitive to any of the increases in end product prices.
I mean, food inflation is really high,
correct,
so obviously.
Correct. So I can only assume that the current tariff outlook is adding a little bit of pressure on existing food prices, and ultimately will that be passed on to the end consumer, or will the actual food producer try and absorb that? And if they do absorb it, will that impact profitability, and with it, some of the commitments they'd like to make towards CapEx? A lot of questions rolled up into one.
And I'll try to answer as many as I possibly can. But the one I would certainly like to point out is that we do anticipate there will be a slowdown in spending. First and foremost, food inflation is very high. I don't think the average consumer has much of an appetite to absorb any additional price increases. And those price increases are certainly on the way in the form of tariffs or tax, whatever you want to call it. It's certainly going to impact the bottom line and the outlook in terms of spending for the next year.
So what are when we break down the tariff picture, indeed very complex, what are the three kind of impacts that you expect to see on the industry? Where is those cost inflations going to come from?
So I think for the most part, the biggest impact or the most influence on the food and beverage industry is going to come in, number one, the cost to build. The cost to build because there's additional tax on steel and aluminum that went from 10% to 25%. So you could just imagine in a food and beverage manufacturing facility, stainless steel everywhere. It's a requirement. The other thing, too, is going to be the higher cost of input cost, the higher cost of producing food products, meaning grains, commodities, as well as the packaging material for food products, aluminum, tin, as it relates to canned beverages, soup, cans, and things of the like. We're going to see some increased costs across the board.
Yeah, so I guess some segments of your industry are going to kind of get that double whammy impact. One on the packaging costs associated with the packaging metals, but then also additional layer of cost inflation for the ingredients, right?
Absolutely, yeah.
Now, taking a step back from the tariffs, we know that this is a disruption at the moment, and hopefully we'll get some kind of resolution in, let's say, 90 days. Are there any market trends that may actually lead to a shift in the current trajectory? Let's look at some of the positives.
Sure.
I'd like to start firstly with the kind of composition of spending, so the type of capital spending that your researchers are tracking around the world.
So, I mean, we pretty much categorize that as grassroots or greenfield spend or in-plant CapEx. I can also tell you that we were already seeing a slowdown in the number of new build grassroots type activities. And what we're seeing more of is companies are looking at ways to actually improve the bottom line. With the additional costs to build, we're seeing a growing trend in M&A activity, mergers and acquisitions, where it's much more accretive to the bottom line to buy as opposed to building.
So buying market share through M&A,
exactly,
as opposed to entering a new market or looking to increase your market share in a market that you may not have good penetration with. So rather than trying to build a new grassroots facility, buy the brand.
Absolutely, but then taking into account building comes with the additional cost of steel construction, the time to get a permit, and all the other added expenditures that could push the project out of becoming viable to actually being canceled.
So if grassroots developments that you're tracking around the world are starting to sort of soften or at least stay relatively flat, are you seeing any interesting growth trends when it comes to the in-plant capital expenditures that your researchers are monitoring?
I think for most companies, the term that they're really focusing on is operational expenditures, or OPEX. These are small in-plant projects that have a higher return on investment, shorter time frame to develop, plan, build, construct, complete. Those are the things that are going to be driving the market. As a matter of fact, those are the projects that we are seeing most of the automation being driven toward.
And when you talk about automation, can you just define what kind of projects those would be?
So automation in a food and beverage processing plant really delivers to the point of less human interaction, whether it's because of unreliable labor, unreliable skilled labor, or the high cost of labor, using machinery, using AI, using computer, using data to actually process, produce, and package the product.
And I guess that's really quite a big focus, bearing in mind that probably COVID saw a lot of the workforce, the labor actually exit the market.
It sure did, yeah.
It's about really trying to produce as much, if not more, with fewer people, correct?
Absolutely,
okay.
Absolutely.
Okay. I would like to spend a little bit of time just to tease out from you some of the, I guess, trending sectors that your researchers are tracking. Now, I know that when you and I, we've done a number of these webinars, we have multiple conversations over the last few years. You always used to touch on alternative proteins. Is that still trending, or have we seen that soften?
That's a really good question, Shaheen. The alternative protein market was a huge driver some years ago, and that market has fallen off sharply. Fallen off in terms of the investments. We're actually seeing some of those production lines that came online in the past few years go offline. So that is not a strong driver for the food and beverage industry any longer.
Now, one other market that I know we used to discuss, which was certainly trending, was the biofuels market. I mean, we're seeing alternative fuels across the world, new refineries being built, that pivot away from combustion engines to use greener transportation fuels, and obviously that was a big pull for the ag products. Is that still moving with some degree of momentum?
Shaheen, I hate to make it seem like it's all gloom and doom, but that's another sector of the two that you selected that is not going to be doing so well. moving forward. And that's mainly due to some of the incentives given towards biofuels that have been removed. And so the ag sector spend that was driven by the biofuel market is going to be flat.
Randy, it's my job today to try and actually find out, are there any bright spots out there? You know, we're seeing a lot of focus on, you know, food security. We have growing populations. So there is certainly a momentum towards, you know, some of those capex expansions that you talked about. From a sector perspective, are there any trending sectors or growth markets that you think that our listeners today should be sort of honing in on and making sure they put on their radar?
I mean, there are. Obviously, when we talk about the food and beverage industry, it's hard to just speak from a holistic standpoint, meaning there are various sectors that drive the spend, that are various sectors that are going to be contracting. I think on the more positive end, I would like to consider two things: the baking sector as well as the beverage sector as well. Ready-to-drink beverages has been a huge market for many companies across the globe, and that's going to be one of the strongest sectors moving forward. From a geographical standpoint, I would look into areas where food security or food insecurity is an issue: the Middle East, Southeast Asia, Africa, and in certain countries in Latin America.
Randy, as always, it's great to try and get some time with you and discuss some of the trends and get your insights and views today. Really appreciate the time that you've freed up. If any of you viewers who have joined us today, if anybody has any questions about what we've discussed, then please reach out either to Randy or myself. And then all it leaves me to do is really say one final thanks to the folks over at Train Rental Services. Please do reach out to them if you'd like to find out a little bit more about the services that they offer. So with that, a very big thank you for joining us. I hope we've helped you a little bit navigate some of the currents of change that we're seeing today. Thank you.
Thank you.